We just got some big news in regards to Voyager Digital, the cryptocurrency trading platform. In this video, I'm going to go through exactly what that news was, what it means for the company, the stock, and make sure to stick around till the second half where I give my updated 2021 price targets that factor in this new news as well as some growth estimates. So obviously Voyager up 9.4% on the day of news of asset under management figures. The company just released their current asset under management, which is now 1.1 billion US dollars. Absolutely huge growth when it comes to asset under management. Now, when we look at revenue for Voyager, the CEO has said that to kind of calculate revenue, you take about 10% of their asset under management. So assets under management are directly correlated to revenue. So to see this giant growth in assets under management essentially correlates to direct, extremely high revenue growth for the company. So here we have a statement from them. They announced assets under management surpassing $1.1 billion. It's now sitting at around $1.15 billion, which is up 5x from the 230 million US dollars they had at the end of December 2020 and up from $800 million just 2 weeks ago. They grew their assets under management by 30 to 40% in a matter of 2 weeks. That's absolutely huge, and it just shows the growth that their platform is experiencing. In addition, the company processed 1 million trades so far in the month of February, which exceeds the total amount for the month of January, and I can't stress enough the importance of this. When we look at Voyager's revenue, it can be divided into two main categories: revenue collected from interest and revenue collected from trades. Revenue collected from interest is essentially Voyager taking a cut from the interest that you earn every year. When you collect or when you hold Bitcoin, let's say, in the Voyager platform, you earn around 5.5% interest. That's after Voyager takes their roughly 10% cut. So obviously, assets under management increasing directly correlates to an increase in Voyager's revenue. The second main part, and this is the bigger part of Voyager's revenue, is revenue from trading. Whenever you buy or sell a stock or a cryptocurrency on Voyager, there is a spread, essentially the bid price and the ask price, the minimum you got to pay for or sell a stock. There's a little bit of a gap there, and that's what Voyager takes for every trade. So to see an increased volume in trading means a direct correlation to an increase in Voyager's revenue, which is why we're seeing this bump in stock price here today. Now, taking these two figures, we can kind of get a sense of their numbers and what they're going to be doing for the month of February, which I'll go through in a bit. Now, here we have them commenting on their balance sheet, which is absolutely incredible. They now have around $156 million sitting on their balance sheet. This will allow them to expand their business, to release new products, and to keep a good margin of safety, and really eliminates that risk of bankruptcy, which was a real risk about a year ago. Now, with this, bankruptcy obviously is almost out of the picture, and we don't really have to worry about it essentially at this point. They are well capitalized to continue growing their business for international expansion and to release new products. Now, here he talks about the balance sheet and then goes on to thank a bunch of their employees, and I think some sort of an executive resigned. They replaced that executive, nothing really too important here. So that's mainly the news that came out here with Voyager. The stock is now up around 9.4% on the day. I think that this increase in assets under management is really correlated to two things. The main thing, in my opinion, is the growth of their business model. The second thing is the growth in Bitcoin prices and Ethereum prices over the past few days here, or not few days, but past few weeks and past year. We've seen giant increases and bumps in the price of Bitcoin over the past week. We've got a lot of news in regards to Tesla buying $1.5 billion in Bitcoin, and just an increased validation of the cryptocurrency, which has sent it skyrocketing, and with that, an increase in Voyager's assets. So while this is great, this is something we have to keep in mind. If Bitcoin going up means more revenue for Voyager, Bitcoin going down could also mean a decrease in Voyager's revenue, which is something you have to keep in mind. So fingers crossed, Bitcoin either kind of drifts up or stabilizes for the year and we don't see some sort of a major correction. If we do, it's not at the end of the world, as this is a very fast growing company, meaning that assets under management will probably get back to where they are even if Bitcoin drops 20, 30, 40%. And to be honest, what the CEO said is kind of interesting, with the fact that with volatile days comes some of the busiest trading days. When Bitcoin drops 10, 20%, that's some of the best days for Voyager, as there's such an increase in volume of people buying or selling, which directly correlates to revenue for Voyager. So as long as Bitcoin stays volatile, that's incredible for Voyager going forwards. And this is really something you just got to keep in mind, a potential risk for Voyager going forwards. So here we have my full year 2021 expectations when it comes to Voyager's revenue, and then we got some price targets here down below. So what did I do here? I went ahead and drew out two models. One that compounds the revenue 15% monthly, and one that compounds the revenue 10% monthly. These are kind of the two scenarios. I don't see them growing any slower than that 10%. I think these are very conservative, especially given the fact that they have 5x'd their assets under management since December. I mean, they did $8.5 million in revenue for the month of January. And they, I think, did like 2.5 million in the third quarter. So growing absolutely on a huge pace. And in my opinion, this 15% is actually pretty conservative given the fact that international expansion is coming. And yeah, so that's about it when it comes to that compounding. I think 15% compounded monthly has like a 40% probability of happening, a 10% compounded monthly rate. I think that's more of like a 60% probability of happening. Either way, I don't see anything out. Like if something, I see them outperforming and growing 20% monthly. But anyways, for the month of January, they've already released this, $8.5 million in revenue. Now for February, this is significantly higher due to the massive growth we've seen over the past month. They reported around $2.5 million in revenue for the first 4 days of February. Now originally I said that this isn't too sustainable given the fact that this influx in users could lead to an increased spike in volume. And that could kind of stabilize or diminish over the coming weeks. But given the fact that this platform has grown so significantly even since then, makes me kind of think that I think that figure can stabilize over the month of February, and we can kind of build on that going forwards into the year, which is why I took that $2.5 million for the first 4 days, assume that that 2.5 would reoccur every 4 days for the full month of February, and we get around $15 million in revenue for the month of February. Now at that point, I compounded that 15% monthly up until December, where we get around $382 million in revenue for the full year of 2021, which is significantly higher than the few million they made last year. Now here we can kind of pop a price to sales of around 20. I'm giving it this because of their high profit margins. They deserve to be valued like a tech company, especially given their growth. And given that a lot of companies like Snowflake or Palantir or Unity are trading at just 30, 40, 50, 100 price to sales, I think a 20 is pretty conservative, again, given their massive growth and high profit margins. This would give us a market cap of around $7.65 billion and a share price of around $54.67. Now, in terms of shares outstanding, I'm using around 140 million. Yahoo Finance says it's at around $130 million, but I'm not sure if that includes the recent dilution that they did a few days ago to raise around $100 million onto their balance sheet. So I'm just going to go conservative with that, assume it's 140 million shares, and that gives us a price target of around $55 per share. Now, I think this is pretty realistic given that they're going to expand into Canada around March, April, and Europe by the summer, which are going to be huge growth opportunities for the business, let alone the United States, as cryptocurrencies continue to expand in popularity and as the business continues to expand. Now, here we can kind of get a sense of the 10% compounded monthly rate. Now, this, in my opinion, is a little more on the conservative side, but I like to be conservative with my price targets since we can only get better from there. I like to set my expectations low so that I can kind of know the base case and almost like the worst case scenario and be prepared for that. So in this case, I took the $8.5 million in revenue for the month of January, did the same in February. I don't see them doing any less than $15 million in the month of February. And then I took that and 10% compounded that over the next 10 months to December. That gives us revenue of around $286 million. And I did the same thing. I gave them a price to sales of around 20. That gives a market cap of around $5.7 billion and a 2021 price target of $40.92. Now, this is a little more on the conservative side, but when you think about it, this is still significantly higher than the share price here today. Let's go back here and see that Voyager Digital currently trades at around $9.33, or rather $15.17 per share. And if we take a look here, we'll see that the kind of expectation is at least $40 per share, which is, 1.5 times extra where it is today. So that gives us a good kind of viewpoint into where Voyager should be trading at the end of 2021 if they execute on these goals and hit these numbers that I've laid out. I think these are very realistic numbers. I'm being very conservative with this 10% compounded monthly rate. And even with that, that's still significantly higher than it is today. So I have a position, Bill. I think Voyager's grown to around like 30% of my portfolio. I'm personally not selling. I don't really like to sell stocks unless it's absolutely necessary if I find a better opportunity somewhere else. And given the fact that this company is still undervalued on a revenue and valuation basis just 1 year away, I don't see any reason to sell the stock. I mean, a lot of people look at the chart and they see this massive spike, right? Going from like 70 cents per share back a year ago to now $15.14. And I feel like a lot of people might find it enticing to sell their shares. And I'm going to be honest with you guys, I think they're making a big mistake. If you believe in this business model in the long term and set out these price targets, I recommend you kind of go through these numbers yourself to build some confidence in these numbers. I think this is a very undervalued company, even just a year away. So if I didn't have a position, I would probably start one. This is just an incredible company. I like this as my crypto play. That was the main point of this. I wanted Voyager to be my cryptocurrency play. I love Voyager Digital. I think it's a great company long term. And these are my price targets kind of 1 year out. I made another video on February 2nd kind of explaining my long term goals and price targets for Voyager Digital. Now here I'm just going to kind of go through exactly what I said there. Management expects around $20 billion in assets under management by 2025. Earlier in January, they said this number was conservative. And given this extraordinary growth that they've had over the past month, this just makes it even more conservative. And in my opinion, management in Voyager Digital could easily hit $30 billion in assets under management by 2025. Again, assets under management is around, or rather revenue is around 10% of assets under management, which would give us revenue of around $3 billion, and with the price to sales of $30 billion market cap, and a price target of around $264 per share. Absolutely huge. And this is really what's keeping me with Voyager, and what's making me just hold my shares. You gotta hodl. And if something, I'd probably buy more. If you told me I gotta either buy or sell my shares, I'd definitely pick buy without even thinking about it. And even these numbers, that's using a price to sales of 10. A 10 price to sales. An absolute steal given their high profit margins. I think it's around 80% margins when it comes to this company, an extremely profitable company. So the Coinbase IPO will really give us a lot of clarity. I'm going to do an update video right after that thing goes public to get us a better idea of the valuation and what we can expect Voyager to be trading at. Obviously, Coinbase is another cryptocurrency trading platform. So to get a sense of that will let us get a sense of what Voyager should be trading at. Right now, I've got fair value at around 15 or 20 price to sales. But again, they've got huge growth. They're growing faster than Coinbase. They got a better platform. They offer more coins. They offer interest. It's just a better platform around or just across the board. So anyways, guys, I really appreciate you sticking around here. I really hope you enjoyed this video and this update on Voyager Digital. Let me know below if you own Voyager, if you have any questions or comments on any of the things that I've said here today. If you appreciate this content, make sure to drop a like as it really helps out the channel. Subscribe if you're new. Thanks so much for watching and have a great day.